Hey everyone, welcome back to Corporate Decoder, where we try to make sense of the confusing world of business filings, and oh boy do we have a juicy one today. Get ready to peek behind the curtain as we decode IonQ's latest moves, and let's just say their top brass aren't just crunching numbers, they're also getting a nice chunk of company stock. If you appreciate getting the real story behind corporate announcements, make sure you're subscribed and join our Discord community linked in the description below. It is the best place to keep the conversation going. Alright, so IonQ Inc. is a company we've talked about before. They're a big player in quantum computing, which is a super futuristic technology that could change everything from medicine to materials science. Today we're diving into a report they filed that tells us about some interesting changes in their executive compensation. It's called a Form 8K, which is basically a way for companies to quickly report big news that investors need to know. Let's look at what IonQ has registered. They have their common stock, which means the regular shares that people can buy and sell. The important part here is the par value, which is basically a tiny amount like 1/10,000th of a dollar. This is a very common accounting detail and doesn't really impact how the stock trades day to day. Then we see their warrants. Think of warrants as a coupon that gives someone the right to buy a share of the company's stock at a specific price, in this case 11 to 50 cents per share. This is a way for companies to raise money or reward people, and it signals that people believe the stock price will go higher than 11,550 if these warrants are to be valuable. Now for the juicy part. The report talks about what they call certain executive officer equity grants. This means special stock awards given to top executives. Back on August 11th, the company's board, specifically the independent members who are there to represent shareholders, approved some big grants. The biggest news is about their CEO, Niccolo de Masi. He received a hefty award of restricted stock units, or RSUs, for 485,319 shares. These are set to start vesting, meaning they become fully his over 3 years, with parts of them becoming his each quarter. On top of that, his annual base salary is going up to a cool $700,000. And it's not just the CEO. Paul T. Dacier, who is the Chief Legal Officer and Corporate Secretary, also got a grant of RSUs. He received 109,019 shares that will also vest over 3 years, quarter by quarter. So why all these stock awards? The report explains it's all about tying executive pay not just to showing up to work, but to the company's success and making sure the executives are thinking like owners. They also mentioned looking at what Mr. de Masi might have given up from a previous job and making sure that the rewards for different top employees are fair and make sense compared to each other. It seems like IonQ had a strong period of performance and is focusing on important growth strategies, and these equity grants are meant to keep their top people motivated and aligned with those goals. Now let's take a step back and think about what this really means. IonQ is operating in a very advanced and competitive field. Giving large equity grants to key executives, especially the CEO, is a pretty standard practice to attract and retain top talent in high growth, high risk industries like quantum computing. It's essentially saying we believe in our future and we want our leaders to have a significant stake in making that future a reality. The salary increase for the CEO from $700,000 is also a substantial number, reflecting his role and responsibilities. The fact that these awards are vesting over 3 years is important. It means the executives can't just get this stock and immediately sell it. They have to stick around and perform for the company to fully earn it. This is a good sign for investors because it shows a commitment to long-term stability and performance. If the company does well and the stock price goes up, everyone from the CEO down to the shareholders should potentially benefit. However, we always need to be a bit cautious. While these grants are designed to align interests, they are still a cost to the company. For a company in a capital-intensive field like quantum computing, every dollar spent is a decision that needs careful consideration. We'd want to see these equity awards translate into tangible progress, like advancements in their quantum technology or successful commercialization of their products. Otherwise, large executive compensation packages, while common, can sometimes draw criticism if the company's overall performance doesn't justify them. For IonQ, the key opportunity here is to harness the innovation power of their executives, fueled by these incentive packages, to solidify their position in the emerging quantum computing market. The risk is that if they don't hit their strategic milestones, or if the market for quantum computing develops slower than expected, these compensation decisions could be viewed negatively. In conclusion, these executive equity grants and salary adjustments signal confidence from IonQ's board in their leadership and their strategic direction. It's a common and often effective way to motivate top executives in volatile, cutting-edge industries. The real test will be whether this investment in their leadership team translates into sustained growth and breakthroughs for IonQ in the years to come. Alright, that's our take on IonQ's latest filing. What do you think about these executive compensation packages? Do they resonate with you as a smart move or something to watch closely? Let us know your thoughts in the comments below. If you found this video helpful, give it a thumbs up and subscribe for more in-depth corporate breakdowns, and don't forget to join our Discord community for more discussions. We'd love to have you there. Thanks for watching, and we'll see you in the next one.